So let's say that I do find an opportunity. I know that we
Hmm.
briefly talked about like the equilibrium of the marketplace. Uh,
Hmm.
I know that we also look for value add opportunities. How would I go about like just some basics on how to underwrite a deal? Like, let's say I find a mom and pop shop. It's basically under or the rents are below market, or basically
Hmm.
filled to its full potential. How would I
Hmm.
go about underwriting a deal like this?
Yeah.
uh,
Hmm.
what type of financing is available to somebody with let's say no experience in self storage?
Hmm. Hmm. So the underwriting piece, assuming you have no numbers, you can't get a hold of anything right out of the gate. Well, first of all, the good news is there's a lot of data that's available already, so
Uh-huh.
you can look at the rental rates in the market.
Mhm.
So look at a 3 to 5 mile radius. You can go online, and there's a number of aggregator sites as well as just the individual sites themselves, and see how much they're charging for a 10 by 10 and a 10 by 15 and a 10 by 20, and do that for the competitors in the market, and then you come up with an average rental rate per square foot.
Mhm.
Now, as we underwrite commercial properties, as you know, Jose, we look at everything that is on an annual basis. We look at everything on an annual basis.
Yeah.
So we get our annual rental rate. Then, if we're looking at the size of this facility, we can go to Google Earth Pro. We can look at the amount of square footage that the facility is, and then just assume from the other projects that have traded, in the market by going to CoStar and getting comps. What can we expect to pay per square foot in this market, or at least get an idea of the appraisal amount. So thereby, we may have a basis for buying it, or go into the tax records and find out what the last price was that it was paid for, or a value that was assessed at recently.
Mhm.
And then you've got the numbers. So it's 200 units. You can look at the average rental rate per square foot. You've got your income.
Mhm.
Expenses, most of those you can generate by looking at the taxes online. Insurance, you can get a bid for that. And if you don't want to go through all of those and you're not familiar with self storage, then
Mhm.
throw in an average of 35% of your income, and that is your expense ratio. So in self storage, it averages anywhere from usually 28 to 35% for a single story facility like that. So you've got your revenue because you got it from the market. You know the size, you know what that looks like when it's stabilized at 85% occupancy.
Mhm.
35% expense ratio on top of that, subtract it, is your net operating income. And then simply apply a market capitalization rate, which again, you probably receive from CoStar and some of these other facilities that sold, and it'll get you in the ballpark. It's a range of what you think that is worth and what you'd be willing to pay for it. And then once you get a hold of the seller, then you know whether you're in line or not.
Perfect. So essentially, let's say for like 100,000 gross revenue, you take a
Mhm.
35% expense ratio, approximately, just to kind of do some quick numbers,
Mhm.
and
Yep.
15% vacancy expense. So basically,
Correct.
you multiply. So if it's 100,000, you could
Mhm.
basically expect to receive about $50,000 of 50% with the vacancy and the expense, and then that would give you the NOI approximately.
Potentially, except that our gross rent is based upon an 85%
Oh, it's
occupancy. So we start there because we assume, and bankers and appraisers, they'll never take it up to 100. So we don't either. So we start there at 85%. That is our gross that we're going to use. And then we subtract the 35% expense ratio.
perfect. Okay, that clarifies it for me. Okay,
Mhm.
perfect.